Excellent, excellent. Okay, boys and girls, just sort of setting up a little bit as we are speaking. Do let me know if you can hear me loud and clear. And then we can sort of be ready for 7 o'clock. Happy days. All good? Fantastic, fantastic. Goody gumdrops, goody gumdrops. All right, let's see who's in just while we kind of waiting for it to chip up. Okay, so John Stephen, here, remember that name from last week? It's good to see you, Phil. Jeremy, Kathy, Kevin, and Dominic. Oh, questioning already. Okay. What time to trade GBP USD on the 13th, tomorrow? Trade anytime you like, to be honest. Personally, I start on a Monday. I kind of let the open get out of the way, and then I start looking at it from about 9 AM onwards. It's just because Monday is quite a difficult day. It's just one of them things, but it's kind of personal to myself, Dominic. I don't like particularly trading Monday morning. I don't particularly like trading Friday afternoon, and I'll tell you for why. It's unpredictable. You've got money coming in on Monday and you've got money going out on Friday, and Friday has another part to it. I like to have an easy weekend. I like to just be done and dusted. So happy days, happy days. Okay, so what else have we got? Ivan, how are you, my old cocker? I hope you're well. And Finny, how's little Finny? Good lad, good lad. Okay, we're pretty much coming to top of the hour, so we'll kind of start. And I normally stay on for about an hour. And for those of you who haven't been here before, it's a very open source format in the sense that I'll start with some of the email questions. Now, I've only really got one, which is to do with props. So I'll answer that first. And then it's driven by you guys where I'll try and answer what you're after. Now, it's a case of, if you just say, oh, just show me your strategy, I'm not really going to answer that because it's unfair to the guys in the Scruffy squad. But if it's basic strategy or mindset, anything else, I'll give it a go. And I think that's about as fair as it can be. And if you've got that burning question and you want to help the channel and you want to help good causes, do use the super chat, because obviously my education was very expensive and I'm going to try and give it to you for free. Simple as that. Okay, so where else are we up to? Whoa, there's a long distance. Peter from Kenya. Wow, I bet his weather's better than ours. Ours is shit. Sick of it. Just want to go to sunshine. Might have another holiday, actually. Okay. Frederick, how are you, my cock? How are you? Okay. This one might actually help a number of the guys. Pakistan. All right, we really are global tonight. Fantastic. I got a number of emails. One of them was from Kathy. I'm going to kind of give a little salute out to Kathy as well. And they're all actually around similar subjects about starting off with smaller accounts and what's the best way to go forward, all of that sort of thing. And I'm going to home in on an email from Christos. So it's a little salute to you, my friend. I don't know where you're from because you didn't say it on your email. But it was asking me which was the best prop firm to use, and then drilling down knows that I use the 5%ers, which was the best program. Well, it's quite a difficult question to answer because we all have different ideas on what we want. Now, when it comes to the prop industry, I'm not a particular fan of it. And I'll tell you for why. I think it's sold in such a way that it's sold on the money, not the process. I tried to touch in this on Coffee with Scruff the other day. The moment you're chasing the money is the moment you've lost. You genuinely have. And for anybody in here that doesn't like to hear this, you're probably going to be a bit upset by the end of this live. Because that's the truth. Money is the root of all evil, as they say. And my gran used to say, money will see you out, meaning it will show the true character. If you're chasing money, what happens is you become greedy. And then when you're greedy, you want more. And when you want more, you'll gamble. That's what the prop industry is sold on, because they sell it on these massive accounts. You know, oh, we're going to fund you millions. Yeah, they are to a degree, but they're not. What they're actually doing is giving you leverage to that amount. Now, if you understand that and you're going in with your eyes wide open, then the prop industry becomes far better. Because I'll give two kind of examples, and I'll flash it on the onto a website, and I'll kind of show you how to pass one of these things as well. The two big ones is obviously the 5% is an FTMO, and I'm constantly asked to trade FTMO, and I constantly say no, and I'll tell you for why. Because it is time restricted. You've got to do so much in 30 days, or it was the last time I looked at it. It might have changed now, but I don't pay a lot of attention to it. But it's time restrictive, and it used to be something like 10% in 30 days. Now, for me, that forces gambling. And as soon as you're in that route, it's bad stuff, okay? Whereas when I first came and was told to go into the 5%ers, and this is like a salute to Volker who got me into this. The part that I liked was you can trade what you like, when you like, and how you like. You know, because in FTMO at the time, they didn't let you do overnights, they didn't let you do news, and you certainly weren't allowed over weekends. Again, that might have changed because I haven't looked at it for a while. But that was the way it was. 5%ers, do whatever you want, as long as you stayed within tolerance. Now, where it falls down is if you're given a £100,000 account, you think you've got £100,000 to spend. You don't. The drawdown is your account, and that's where you work your position size from. And if you do that, then you've got buying power to open any asset you want, but your position is controlled by the drawdown. Hope that makes sense. I'll kind of try and illustrate it. And then all you would do is, doesn't matter what the payout is. You know, greed takes over. Oh, I'm only getting 50%. I'm only getting 70%. So what? You ain't putting the money up. They are. So it's a partnership. And if you're in a partnership, well, one partner gets so much, the other partner gets the other bit. That's fair. If you don't think that's fair, this industry is probably not for you, because you're chasing the dragon. And you can only trace the dragon so long. Pull its tail, and it's going to turn around and it's going to burn you. And that's why chasing money is evil. You know, chase the process. The money will look after itself. It's why I say at the end of pretty much every video, do what you love, and the money will follow. Hope that kind of makes sense. But let me kind of just illustrate something for you, and then see what questions come in up through the chat, rather than me banging on. If you're looking at this, what happens is you either go through a boot camp, go through an instant, go through stocks. I'm still doing stocks. The account is still going. Kind of got it by the skin of my teeth. It's not doing very well, but I'm still in the game. But these are Forex indices, etc., which we all know and love and do quite well. Now, in relation to if you've got lots of money, do you need a prop fund? No, you don't. Use your own funds. If you haven't got a lot of money, but you want to accelerate your personal account, a prop is a good way to go because you will hit the milestones and get more and more money. And these guys are pretty darn good at it. And I'll show you for why. Now, firstly, if your skill set's not quite there, it's almost there, but not quite there, do this, a boot camp, because it's only 95 euros. And you should be trading with a bit of skin in the game, because then that'll teach you the emotional content. If you're just doing paper trading, it's great to fine tune things, but it won't teach you how to trade fully, whereas that will. But if you do have the skill set, just do that. So what I'm driving at is these parts here. So if we take the middle one, for example, you start with a 10,000 instant funding and you have to make essentially 600 quid, $600. But you stop out $600 as well. That's the account. That bit there. Okay. That is leverage. Okay. Now, how do you pass this thing? Because I did say I'd mention that. Well, it's very simple. Doesn't matter what your system is, as long as you understand its expectations. What have we got? You've got 180 days to pass this thing. Okay. I haven't used this website for a while, but let's have a little look. So, calculator. So if we set it today and 180 days, what's that? Right, if you bought this tonight, you've got till the 11th of August this year to pass that. Very, very simple. But how many working days are within that? Because obviously the markets are shut on a weekend. Okay. Did I say that was? I got that date actually. Buggy. Must be you losing me brains, boys and girls. I'm losing me brains. Haven't had enough coffee. Right, from today. 11th of August. Okay. So 11th of August. So let's have a little look. So 11th of August. Exclude the sort of weekends, public holidays, etc. You've got 125 days. Okay. So if you've got 125 days, 600 divide by 125 days, it's $4.80. Times that by 2, call it a tenner. You do $10 a day. That will give you enough buffer zone if you get something wrong, and you'll do it in half the time, about 60 days. Why is that important? Why was it important to show you something like that? Well, the importance was it shows a realistic target and expectation. Now, you know you got $600, right? So that gives you a position size of roughly 50 cents. Okay, I work to 50 for every 500 of margin. Well, you've only got 600 to play with, so you're left with 50. So if you're doing 10 pips, that's a fiver. Do 20 pips, it's a tenner. You're looking at 20 pips a day. That ain't difficult, guys. That's how you do it. You break it down into its smallest component and then build the strategy around what you need to do. Very, very simple. And then if you do 25 in a day, amazing. You've just knocked a few days off the end, and then keep it going. That's how to survive it. Does that make sense to you lot, guys? I just wanted to touch on it because, like I say, it's very easy to write it down in an email, but I do get the same questions kind of over and over and over. And I just wanted to put it out there and kind of highlight it for you. Okay. Happy days, happy days. No, nothing. Okay. So let's have a little look and see what's in the chat. Gibson, what do you do? Nigeria. We are international tonight. Absolutely international tonight. Right, Vinny. Basically 100% of your drawdown in 20 days. Oh, well, you've got 20 days in FTMO. Even worse. It's one of those things. I find prop an odd industry. Do I think it's a useful tool? Definitely. In fact, I'll kind of show you something. We go here. This is Traders Day Live. This is an international expo. It's been held in London this year. And a lot of the speakers are from the prop industry because it's being funded by the prop industry. And if we look at the speakers, I know Simon. Simon started like us. He's now a hedge fund manager. He's a good guy. Most of you'll probably know Mark Halstead from UK Spread Betting. Charlie Burton's been around forever. Anna. And you can see the two that you'll see regular from 5%ers, which is Michael and Sol. And I'm not so sure about this fat fucker. You'll probably get on the stage, start swearing and get kicked off. But it's me and Jordan. And what I'm going to be doing is I was invited to come and talk on the stage simply to highlight the pitfalls of the prop industry and small accounts, but also show you how to build it up into a livable wage and kind of get a half decent lifestyle. So there you go. So I wouldn't do that if I didn't trust, I wouldn't put my name to it at all. So let's have a little look, see what we've got. So Grant, how are we doing, my friend? What have you missed? Not a lot, just a little bit of an introduction, and I wanted to answer an email that was based on smaller accounts and prop. So I was kind of giving my thoughts on prop and how you can use a small account to buy a prop fund and then cycle the profits once funded into your own account and accelerate it. So that's about it, really. And that's what the crackheads do where I live. Yeah, you're probably right. There, sounds like a wonderful place. It's not Middlesbrough by any chance, is it? So, hello Antonio, how are you? I'm glad, Frederick. What I might do is I might follow up with what we were talking about the other day. I might actually buy a lower level one and just trade it with you to help you. Talk to me about it tomorrow in the Discord, and we'll see where we go. Hello, David. Hope you're well. Stephen, let's have a little look, see what this is. You made 20 quid on Friday on the 5%, it's 10k prop, and closed the trades happy. Before the Scruffy squad, I would have left it open for 50. All right, okay. Oh, quite a nice endorsement. Quite pleased. Yeah, what I would take away from what Stephen's comment is there is don't overstress what you're doing. One of the biggest failures in this industry, and I see it all the time, they're swinging for the fences. In this case, hoping for 50, but could lose 50. The market will only give you what it wants to give. Case in point, when we were talking last Sunday, I was asked whether the pound would go up. And I said, no, I'll go down first. And it went down pretty much to the level we were talking about. Let me just fire this up. Take it out to the 4 hour. So we can kind of see where we were. So last week, asking if it was going to come back into, was it this? Where we at? Where we at? 4 hour. Is that Monday 3rd? What was the date? And I'll find it for you. So 12th, it would have been the 3rd. So that was the 5th. So it was that move there, this one. Asking if it'll come back to this. Well, I marked it up, if you remember, and I had a fib on it that said it would kind of come down here. Now, if I just quickly drop an extension onto this, off that drive, there we go. That big level was what was going to hold it back. Now, if you were trying to be clever and go against what's going on and try and get back into that, then Stephen's quite right in what he was saying. Swinging for the fences, you might well have caught the small shifts, but you were going against the bigger trend. And them small shifts, even though they can pay you, because there's nothing wrong with having an opposing position as long as you're prepared for it. But if you were hanging on to the fences to get up here, when everything was telling you it was going down, you would have had a slap in the face. But if you had a sensible target, they would have been fine. Personally, I prefer to go with the prevailing trend, let it pull back, relax, move down, all that sort of thing. And there it was. I was right, because it took it till Tuesday before it decided to come back to our magical 50%. So just a kind of an illustration of how forward planning can help, because it genuinely does. You just think, and if you look at that chart that I've just had on, all those levels might look a bit crazy, but it's all pre-planned, it's all pre-mapped. And those maps help me, but the way I lay my charts out help me. I'll quickly show you something, and then I'll jump back onto this slot. Right, okay. Just pull this across. Okay. Whenever I'm working, whether it's my wage account as you're kind of looking at, or whether it's a prop account like this, and because we were starting with prop, I kind of want to show you this. I always start with this. It's a window of the world or an alpha watch, whatever you want to call it. I have another one on my wage account which has oil on it, but oil isn't in this, so it's not there. Without going too deeply into anything, I can quickly look at this and see what's happening in the marketplace, because there's correlations. Now, the way it's laid out, there's the FTSE. I live in the UK, so it's our major indices. It's in the news all the time, which is correlated to the pound. There's the DAX, which is correlated to the euro. There is gold and the US JPY. Now, why are they there? Well, US JPY can show me a barometer of what's happening with the dollar against Asian markets. Now, that dollar will be correlated to gold, and both of these are correlated to these two, and these two are correlated to that. And the big daddy of them all is the S&P 500, which correlates to all of it. So that can give me a very quick snapshot of what I want to do. Now, I mainly focus on these four markets here. It's where I spend most of my time. And if I wanted to, say, look at cable, because you see, everybody trade cable every day, and you've just seen me do a quick snapshot of sort of cable. If I come up here, I've got various alphas slightly different. Now, these are clean. An alpha is just a clean chart. And if I click that, it shows most of the pound pairs. All I need to do at any one time is to look to see what's going on in this basket. Well, in this case, you've got 1, 2, 3, 4, 5 of them are starting to buy up. Can that help you with your bias? Well, of course it can. Even as a quick snapshot, if you're wanting to buy, the whole marketplace is telling you it's pretty darn good. So you can go, okay. But then you just have to figure out where I'm going to buy. If you drop down into a working chart, got them all the same down here. I can flick that up, and then I've got all my marks, just as you've seen, and I'm ready. And if I'm looking to buy, well, I'll be buying this level. I could buy that level, buy the one below it. Plenty of things I can do. But that's just a very quick snapshot and management of your charts. I find it quite useful, easy way to do things. I don't know. What do you guys do? Tell me in the chat. Ask your questions. Let's see if we can dig it all out. So let's have a look, see where we're up to. Okay. Yeah, happy to do that, Frederick. No problem. Grant, self-control and discipline, the dynamic duo. Grant's hit that one bang on the head. You know, if you've got good self-control and discipline, you'll survive in this game. And that segues all the way back to talking about gambling and money, because money will see you out. And if you are an undisciplined person, it'll pull that character out and exaggerate it. And if it exaggerates, you'll know about it in the morning when your account's being battered senseless. Right, Kevin, if I could go back in time, my trading journey, 3 pieces of advice you would give a younger self. There's a question, Kevin. Right. Well, my trading career was very different, because when I first started, I did it on daily charts and levels, and that was it. And we were just buying at good prices. That's all we did. But when I had the light bulb moment, I can make some money out of this, because I saw a couple of YouTube videos. And it was our friend Greg Secker, believe it or not, that I did watch originally. It's going back from thing. But I'll give Greg Secker his due. He might be a bit animated in one thing and another, but he does know his stuff. I'll give him that. I will give him that. The lifestyle side of it, I think, is a bit much. But if I was to go back in time, first bit of advice I would give myself is do not listen to the noise and hype. Don't listen to any of it. You know, probably 95% of forums are absolute bullshit. Certainly 98% of what's being spoken about inside them are bullshit. A good 60% of the people inside them are dickheads, and 100% of those dickheads are arseholes. So if you're listening to them, you're already down the wrong path, you know, because they can play with your mind. So that would be the first thing. Cut the noise out. The second part of the what I would sort of remind myself is actually what I did remind myself when I sort of blew an account apart to the tune of best part of 18 grand. Stick to what you know. You try all these indicators. You try different systems. You try to follow different people for signals and all of this sort of thing. And I've done it all. I've done it. I bought signals when I first started. Lost a fortune. I hate signals. Anybody ask me for signals, I'll slap you around the head. And the number one rule of my Discord group is nobody asks for signals. Right? Because there's a number of reasons. One, causes too many arguments if you're wrong. But we all have different charts. You know, if you're in a different time frame, your chart can show different levels to what mine will, because the daily closes are different. So signals to me just don't work. And what did I know? I knew levels. Levels work. They're a constant in the market. And the other side of it is price. The price will always tell you what it wants to do. In other words, if it's pushing down until it tells you otherwise, it's going down. So cut the noise out, do what you know. And then the last part of it is be realistic in your expectation. Because I was like that, and a little bit like Stephen's question earlier on about swinging for a fence and losing it. I'm not bothered about the win as long as it's planned. You know, the money is secondary. And when it comes to risk reward, which is part of this, I come from a business background, which is return on investment. I will risk X amount of money to make X amount of money. And I'm going to rephrase that because I don't like that term. I think you should never risk anything. The industry is sold on RR. And quite frankly, it's an absolute load of horseshit. I spent an afternoon with a hedge fund manager on Thursday. all afternoon and we discussed this. They ain't bothered about it either. They're bothered on solid planning and what the return is. And that's it. Now, solid planning is where you get in and where your pain threshold is. Now, that can be 500 quid. Right? So you put £500 on the table. That's the investment. That investment now has to make money. How do you reduce that investment? Well, you break up the position. So you work out what 500 is fully from point A to point B at a full position size. And then you reduce that investment by going in stages and building up to the position. Now that naturally reduces the exposure, but it increases the upside. But if it ran for you straight away and you got 10% back off your money, well, that's a 10% gain, and it's more than any bank would give you for putting £500 on the table. So I hope that makes sense. And that's how I think. It's how I work. Is it for everybody? No. Some people like absolute rules. But we're working in an industry and charts that are not absolute. It's just a case of managing what you see. So they're kind of the three bits. So cut the noise out, trade what you know, and keep your expectations realistic. And then you'll be fine. Okay? Well, hope that helps. I mean, tell me your thoughts. I'm genuinely interested. Okay. So let's have a little look. So, and Grant, discipline's your biggest issue. Okay. Well, here's a good exercise for you. Discipline is difficult, certainly in the beginning stages. I'll tell you for why. It all comes back to the beginning of this conversation. Small account. When you've got a small account and it's let's just say it's under 500 quid, do you really have any respect for it? You know, only making a fiver. Tell me a bank that'll pay you a fiver on a day. There isn't one. But that's what's in your head. It's only a fiver. So you don't treat it with any respect. And because you don't treat it with any respect, that means your discipline isn't there. But if you're going, I want to make £5 today, and then at the end of the week, you've got 25 quid you didn't have, you have £100 at the end of the month you didn't have, at the end of the year, even if you have 2 months of badness, you can have £1,000 from your initial stake. Now, if you were disciplined, that would be fantastic. But if you're a gambler and you're undisciplined, you'll fall at the first hurdle because you go, only a fiver. Who cares about a fiver? But you should, because all money is good money. And you've just got to be sensible in how you do it. But if you think about this over a long period of time, we're in this for life. I certainly am. I'll still be doing this on the day they put me in the coffin. I'll probably wake up and still check the charts, to be honest. But it is a lifetime process. It's a never-ending job unless you get a massive amount of money and you want to retire. But it's something you can do for the rest of your life. But you try to get there too quickly. But in this instance, you had 500 quid starting with a fiver a day. That can give you £1,000 a year, right? Well, what about year two? You start with 1,500 quid, which is 3 times more than you started with before. So in year two, you haven't got £1,000, you'll be getting 3. So in year 4, you'll be starting with £4,000. Can you see where I'm going here? The account will build naturally in the background. And if you do it that way, you'll suddenly find within 3 to 5 years, you've got a bloody good size account. And then you just continually move forward. And it all segues back to being realistic with your expectation. And that's from £5. Simple. Okay. Use Scruffy Madness. Okay. For those of you who are unaware of what Scruffy Madness is, it's a way to build a position up. If you've never seen it or heard it before, it's a form of pound averaging. There are two ways you can pound average. There is the banking system, which is kind of what Scruffy Madness is. It's slightly adapted. And there is the Martindale system. Now, the Martindale system is incredibly dangerous. That's where you put a position on, it goes against you. You put a double position on, you panic a bit, goes against you. You double that position and so forth, till it comes back and pays you sort of a break-even point. You need massive pockets to do it. And it is an account killer. It'll get you out of trouble so many times, but the day it doesn't, it'll blow the account. Scruffy Madness, on the other hand, works a little bit like what I was just quickly explaining. You start with an entry point, but you know where your fixed point is, and you divide it up evenly, and you build a position into it. Now, myself, I work to 5 splits normally. I can take it as many as I want, but it's normally 5 splits because I like to work 20% of the position. The first 3 will be the full trade. Now, if only 3 trades or 3 entries come into the market, they will be greater than a full position at 100% of market. So I've reduced the exposure. I've also reduced how much I'm putting on into the market itself, and my upside is greater. And the final 2, 4 and 5, are my get out of jail free cards, and I use them to either pay off the first 2 orders and get out at break even, small loss, or scratch. And if I do hit my stop, because I don't mind a wide stop, but there's a difference between a wide stop and a haymaker. A haymaker will literally knock you on the floor, and likewise a tight stop is death by 1,000 cuts. It hasn't cost me as much as what I initially started with, because one of the first questions I ask myself, the number 1 question I ask myself is, can I afford this trade? It's the first question I ever ask. So if I'm at £5 a point, I know my entries here and my stop, just for easy figures, can be 100 away. You know, that's a lot of money. You know, do I want to pay it? Not really. You know, I don't want to pay 500 quid for this trade. But if I break up that fiver, suddenly that starts reducing. But if I'm not happy, just half the position size. Very, very simple. Very, very simple. Hope that makes sense in a strange way. Also below the 50. I might have lost the thread on that one, Jeremy. I think you might be referring to the cable chart. You are correct. If it's holding below 50%, there is a high probability it'll stay that way, but it'll also come back to it. And the kind of rule of thumb is, if it breaks the 100 under the 50, it'll move to the 127, and then you're looking for a stall in and around the 161, which it did. And then if it doesn't break the 161 and comes back to the 127, you're then looking for it to get back to the 50%. Fibs are great. I love a fib. Use them every day. Can genuinely map your chart up. Right. Selection. Hello, sir, from Pakistan. Very welcome. Want to join the membership? Here in Pakistan, we don't have the option. Sadly, no. The membership is not mine. It's kind of a misconception. It's owned by Google. YouTube run the membership. I just provide the content and moderate the Discord group, which is why you might think I get lots of money out of it. Trust me, I don't. I get a small commission for running it, and that's it. But if you're interested, I do the odd 1-to-1. I do maybe 2 or 3 a month, and you'll find that in my website, and I can take you through everything what's there. Who knows in the future? I might sort of take it into my own ownership, but we'll see. Yes, correct there, little Finn. Smash the likes. It genuinely helps me and motivates me to do more, as does the super chats, etc. Because I kind of try to do this for a good cause. One of those good causes is looking after you, and another one is local charities where I live. That's why I do this. So what else have we got? Stephen, I've set up my window of the word 6 mini screens and MT5 this weekend. Yeah, it genuinely helps. I mean, if you're part of the squad, I can give you mine because I can give you the zip file for it. It's dead easy. And you just load it up and you've got all of my screens and my marks if I've marked them up as well. What I'll say it does for you, if I flick this back over, just... When you've got a chart marked out like this, or laid out like this, it can just highlight what's going on all the time. Now, you might only trade a single asset. Well, if you do trade a single asset, which I trade cable predominantly every day, you can do it like this as well. You can go A1 cable and look across 3 main time frames. Now, I work to a principle of +1, -1. So if I'm drilling right into it, I would look at that as an anchor, see what's going on kind of now. I look at the 4 hour, +1 up, and I also look at -1, which is the 15-minute. Now, in this scenario here, this is where I would take a quick snapshot of how it all works. Now, I look at the daily first because that is where your bias is kind of coming from. If you can see where the deeper bias is, the deeper direction, we call it the double D, dominant direction. What that does is here, if I'm looking at cable at this moment, I'm going to analyze it. That is predominantly down. And there is no real sign of that slowing up apart from the small bodies. But these tails are telling me it's going down. I can see it's still pushing down here. If I look into the hour to see what's going on at this moment in time, it's rallied up. I can see that's pushing down. This is pushing down. Tail, small body, hasn't really attempted to close under there, but there's a lot of volume pushing that down. And again, that's holding down. And then again, if I look over to a 15-minute, yes, it's come out of the Bollinger Band, but we also know it'll work to the moving average. Well, it came back to the moving average, respected it, held it. You can see it's pushing down heavily, pushing down, but that becomes a worry. Why is that a worry? Because what it's telling me is the sentiment is changing slightly. So what I'll be paying attention to is to see if this starts driving that, and then if that drives a 4 hour +1, I'll be starting to see how it affects the daily. So it's all about reading the market before you go into it. Now, I'll look at a market for maybe 20 minutes before I go into it, certainly for a good 10. I have a habit of checking at the top of each hour. So about 10 to, I'll start digging into it. Okay, I think this is pretty darn good. I've got a direction in mind. Now, I set a direction early morning, and it normally doesn't change till about midday after the first burst, and then there's the rotation. And I'm constantly watching multiple time frames. Genuinely helps me. So just a thought, guys. So let's have a look, see where we're up to. He's everywhere. He certainly is. He's got a few quid, let's put it that way. So I think he can, well, let's put it this way. He's got a massive house in Scotland. He's got a massive house down south. Whizzes around in helicopter, so maybe he spends a bit on ads. He is entertaining, though. He is entertaining. Don't listen to anyone with a fake tan. Well, I've got a real one. Well, what's left of it. You wouldn't have thought I was in Jamaica the other week, in Italy and whatever. I'll have to go back. Anyway, where is the boy wonder? Thought he'd be in here tonight. He's off to Bali this week. If you haven't already caught up with him, go do find the Conscious Day Trader, Yanis, the little boy wonder. Check him out. Make certain you give him support and some love. He's off on his big adventure this week, and going to be sitting watching pina coladas by the beach. I hate him. I genuinely do. Get on a plane, I'll go see him, take him out for dinner. Right, where are we up to? Yes, a VPN. Yeah, you're right, Kathy. That is a possible way around it. I'm not the best. I'm not the best tech. It's Janice, my son. Oh dear, he wishes. No, I've known Yanis quite a while. I've took him on his journey from being horrendous in sort of certain management styles to where he is now, and to watch him grow has been fabulous. It genuinely has. He genuinely has. But in fairness, to watch all of the squad, it's like Finney up there, Yoxie, you'll see some of the names, Frederick. I know them all and I'm very proud of them, because from when I first met them to where they are now, the leaps and bounds, it's night and day. And the community we have, and the camaraderie we have, because we do take the mickey out of each other all the time. Don't we, little hobbit? Because he's only this big, he lives in the Shire. Take the piss out of him all the time. But that's because we got to know each other quite well. So happy days. But no, Yanis, he's a great kid. He really is. He's got a lovely wife and a little son, and very proud of what he's doing. So happy days. Very happy days. So where are we up to? Grant, you are correct. Trading can be a lonely job, and one of that kind of comes back to forums as well, because it's lonely. You have a tendency to go into them, and then you start chatting away and one thing and another, and that's where sometimes you get caught in the noise, and you've got to be able to filter that out. You know, I set up a free Telegram for you lot. It's down in the description somewhere, just so there be no noise. I don't allow arseholes in there. If you're a bully, I'll kick you out, because there's only one bully in there, and it's me that bullies the bullies. And I'm a polarizing person. You either like me or you don't. But personally, I don't give a monkeys. You know, if you're being horrible to somebody, I'll be the one that stands between the two of you, and it's me you'll talk to. And it won't last long, because I kick you out, because I've got the authority to do it, sort of thing. And there's no sellers allowed in there, because that's the other thing. There's a lot of people who'll befriend you and they think, oh, it's brilliant and wonderful, and then suddenly, oh, invest me a bit of money into my signal service. Yeah, that's why I don't like it. So yes, it does become a lonely job, but if you can get yourself a trading partner, somebody that sort of trades alongside you, whether you sort of click on the Zoom call or like what we do in the Discord, where we hold each other up all the time, that's a good thing. And the other thing is, when you're talking about this, try and be open with your partners, because let's be honest, a lot of people don't understand what we do, and it's deemed gambling. That way, it sort of opens up some horrible conversations when you get it wrong. But if you're open and upfront about it, it makes your trading life not so lonely, because then you can talk to your partner. Oh, I've had a great day today. Oh, I haven't had such a good day today. But if they understand what you're going through, then you have a nice conversation. But if you hide it all, then not only does it become lonely, it becomes very frustrating as well. So there we go. Okay. Selection. Can you tell or able to show how many video on Scruffy Madness section? How many videos I've got on the Scruffy Madness? Hundreds. To give you an idea of how many videos I've got for the squad, We've clocked over 1,000 now. There's a full Wear the Scruff course. There is sort of foundation. Then there's God knows how many reflays. You name it. There's hundreds. When it comes to, do I put Scruffy Madness fully out into the public? Not really. Because again, it comes back to what I give the guys in the squad. And it's unfair if they're sort of paying into a service and then it's given away free sort of thing. But essentially, the nuts and bolts of it is know where your entry is, know where your exit is, and divide it up. It's that simple. One of the biggest arguments that I see is, should you go into market 100%? No. Because the market very rarely goes for you. Just go in, tip your toe in the water and build a position up backwards. And you'll find you make a lot more money. It's a strange concept because it's never sold. And it's never sold because the people that are selling things can't trade for shit. Simple as that. Anyway, never mind. Okay, let's have a look. Oi. Well, Finny, you are only little. You know, you're about this big. Teeny weeny. I mean, let's be honest. I mean, I had a chat with Willy Wonka last week. He said you can start in the chocolate factory, you little lumper that you are. You start on Tuesday. Right. I've been a bit naughty again. Drawn naughty pictures, Yoxie. You would get that humour anyway, you little redneck. Correct, Grant. That is the way. My family don't know what I do for a living. They think I play video games. That's what they think. But then again, when I had the factory, they didn't understand how that worked either. So it's horses for courses. But if you talk to them genuinely and talk to them openly, they'll come round to your way of thinking. Don't worry. Is Winky learning to trade? Yes and no. She doesn't like the charts at all. Technically, she's very good at it, but she can't kind of deal with the emotional side of it when things go wrong. Now, I'm quite happy to sit in heat because I'm used to big numbers. When I worked in industry, I worked for the medical sector, so ran a team of sales and I had my own sales. It was all big numbers, so I was used to it. When I had the factory, it was a decent sized factory. I had 17 staff, so you can imagine it was decent big numbers. So when I came over into this trading world when the factory closed, I was never really worried about that. Wink, on the other hand, does worry about money. She's a natural worrier when it comes to that. When it runs for her, it's brilliant. When it starts going against, she makes rash decisions. And those decisions normally screw things up. So what she's doing at the moment is more longer term, but she's doing it through self-managed ISAs. So still sort of trading in a sense, but it's more investing because it's calmer, it's safer, and you don't really lose your money that way. Personally, if you are looking at that, Vanguard's pretty good, but the one that I use is Scottish friendly. You get a half decent return. It's not going to light the world on fire, but it's certainly going to outperform the bank. And you still do a bit of trading because you're picking the pops in it, etc. Okay. So let's have a look. So my wife runs in the room. If you watch tomorrow when Winky's here, I'm going to tell you a good story about things like that. Because this weekend has been a revelation. Let's put it that way. Bloody hell. Woman logic came into play. But watch tomorrow's video. And Finny, you rotten sod, I hate you at times. I genuinely fucking do. He's wound me up about doing a challenge, and and as many of you guys know, I like to put my head on the block. And I'm going to do it. I'm going to do something for you tomorrow. It'll start tomorrow. And if I crash and burn, trust me, when I come to Manchester, you better get your wallet out because the beer will be massive. Right. Anyway, let's see where we're up to. Okay. Dwayne, is there a big difference between market chart on a Sunday versus... Yes and no. There's no real... Right, okay. I'll tell you why I prefer to do it on a Saturday and Sunday. And this might kind of answer the question in a strange way. The markets are shut. So there's absolutely no movement in the market. So I'm not sort of distracted by moving candles or anything. And those levels will stay in play for the entire week. Now, if I'm starting to, say, mark up on a Thursday, my daily could be slightly out because obviously it's had 3 days worth of movement, or 3.5 for Sunday night. So it doesn't make a vast amount of difference because your weekly's not going to change, your monthly's not going to change. But if you're going down through your daily and maybe it's as low as 4 hour, I don't really recommend marking up below 4 hour. They might change. But in fairness, they'll still hold weight because they should only marked if they're clear turning points. If they're not clear turning points, shouldn't be on the chart in the first place. So I wouldn't worry too much about it. I do it more out of habit than anything else, Dwayne. So you're on your phone, late to party, but it's Super Bowl. Oh, God, yeah. I don't think it'll make much difference, kid. Enjoy your party. The chart can always be done tomorrow or on Tuesday. Yoxie, little redneck. Serious note. Oh, no. Serious note from Yox. I don't think so. Here we go. Come on, let's have a look. In his group, we've all screwed up, we still do, but no one takes the mickey. And no, you're right. You're incredible. Well, we will take the mickey, redneck. We generally will take the mickey. But what we won't do is bully. And if somebody has fell down, nobody will point the finger at them. Not one, because we've all done it. Every one of us. I made a complete cock up last week on the Swissy, and if you look at the videos, you'll see it. But my experience told me to get out, and I got out a small loss, and I was fine. Now, sometimes some of the guys don't do that. They just absolutely get battered senseless. So what we do is we pick them up, dust them off, make certain they're smiling again. Then we'll take the mickey, because then when they're smiling, we can see the funny side of it. They normally get a slap round the head off me, because we do lose a lot of gifts. And then we try and break down what went wrong and help. That's the beauty of that group. We're all in it together. It's not a teacher-mentor thing. I don't like that. I'm not a teacher. I'm certainly not a mentor. I'm just one of the guys that happens to have a bit more experience. And within the group, there's a lot of other experienced guys from all different types of experience. Some are very good with mindset. Some are very technical. I'm terrible with tech. You know, I really am. So we've got good techie guys. We've got good chartists. We've got good people with MT5. And together as a hive mind, we move forward. And I couldn't think of a better group. It's a happy day. You're a good lad. Are you shite? I know you. I've met you. Bloody crazy little sod. But we love you to bits, Yox. We love you to bits. And I hope all goes well this week for you. I genuinely do. So where else are we at? Simon. That's very, very kind of you, Simon. Very, very kind. Peter, how long have you been trading? Bloody hell. Personally or business-wise? If it's business-wise, 18 years plus. Personally, about 15 plus. Kathy's hit the nail on the head. The absolute nail on the head. Emotionally, it took her a while to get better. Your mindset and your emotions are what make or break you as a trader. Now, a lot of the time, whenever you come into a live stream, all you want is just show me the strategy. Where do I get in? Where's the moving average cross? Where do I get out? What's my position size? What's my target size? All of this sort of thing. That means absolutely nothing in trading. Fuck all. And I know that's controversial, but I'm going to tell you for why. You can get into the market very simply. I'm below a 20 moving average. I'm going to be selling. Okay. Where am I going to sell to? I want to sell to the next level or the base of a Bollinger Band, or I'm going to wait for an oscillator to go to the bottom. That's a system. The next part of that system is how much am I willing to put onto the table? In other words, where's my pain threshold? Am I willing to pay £200 or £300 for this trade, or 50 quid, whatever it happens to be? And then a position size that equates to it that you're comfortable with. So that's money management. But what happens is that's kind of rational thought. Most traders don't trade like that. They trade from a point of emotion where, oh, the market's moving, I have to get in. So the strategy just goes straight out the window. Boom, gone. Then you panic because you've got in probably at the bottom of the market when you should have waited for a pullback to go down. That's the difference between rational and emotion. And until you control the emotional aspect, doesn't matter how much charting you do, you'll always get it wrong. And I hope that one kind of hits home. I'll kind of give you something just to case in point. Just if I flick this down into here. All right. This is a 1 hour chart, obviously. All right. If I was to tell you to trade that, let's see what comes up in the comments here. I'm going to take that off as well. That's all you're looking at. What would you do with it? How would you, what would you pick from that? Would you trade it up or would you trade it down? Nothing? Nobody? Nothing. Okay. Leave it. Nothing. Too shallow. Down. Okay. But you've got to make a choice. So you're going to trade it up. Why? This is the next question. So the first question you have is why? Right? That's the thing. So for me, if I'm looking at that and I've got nothing else to work with, I would say that's going down. Okay. And the reason being is you can see it. Clear as day. Okay. It's going down. Very, very simple analysis there. It's broke a level. It's coming down to the next full level. Okay. Well, all I'm doing here is just a simple snapshot of an hour's time chart to give an idea rather than a full analysis. Okay. But why would I say down? Because until this market tells me otherwise, you go with a dominant direction. That's simple. All right. So now you can start thinking, is this down to the end? That's where you start putting your indicators on. So in this case, we're going to put on a Bollinger Band. All right. So what's the Bollinger Band telling us? Well, the Bollinger Band is telling us there's low volume because it is sausaging. So the next question is, do I now agree with my first analysis? Well, the answer would be no. All right. So what I'm doing here is I'm giving you a thought process to go down. So Why is that? No, because the volumes ran out of the downward move. But is it showing signs to go to the upside? No, it's not. Okay. Have I got anything that can confirm that the volume has run out on this time frame? Well, there is. We will then start going to an oscillator, which is here. Well, this is telling me it's pushed right to the bottom, but it's not overstretched yet. So there's no real turn on the horizon yet either. Okay. So what happens when you start looking at charts? Normally your first criteria is the right one. Okay. So moving down, slowing down, it's not stretched. So if I was to stick with my initial analysis, what I would want is the market to move higher to then continue in the overall trend. And if I was to go against the market, going all the way back to the beginning of this conversation where we were talking about swinging for the fences, it will tell me to be careful with my target. If I'm going to follow the downtrend, I could trade down into this yellow. If I'm going against it, I would only trade to the next two stall points. There's one, there's the other. Trading is about being subjective. Now you can start building further into this by going +1, -1, and then going out to the daily or this sort of thing. But the premise, what I was driving at with this little exercise, was look at a direction that you're happy with and then justify it. And if you can't justify it, step away from it. But if you feel compelled, target appropriately. Hope that helps. Genuinely do. Okay. Let's have a look, see where we're at. You'll find Scruffy Madness in the group. We've gone through it, so you'll be able to see a little bit of it in the replay. As Ed, no context. Up, leave it. Yeah. Thank you, Ivan. Very, very kind. So there we go. But one thing that I will say is, don't trade for the sake of trading. Trade for a reason. Now that reason can be whatever. Now, if you're trading for wealth, fine. You know, if you're trading for a hobby, fine. But when you're making a decision on the chart, as we've just done, trade because you see it, not because you want to trade. Hope that makes sense. Because you're better off sitting on your hands and waiting than just click for the sake of it. So there we go. Been banging on for an hour and 10 minutes or whatever. So we'll start winding this up. Pleasure as always, guys. If you're stuck, I am very easy found. Do drop me emails, etc. And I'll try and answer them and make them into videos. If you want to come along to the squad, you'll be made most welcome. And if you were interested in the 5%ers as we saw at the start, there is a 5% link in the description. They're kind enough to give me a discount for you guys. And that's about it. So happy days, happy days. Sorry, many thanks. What are you sorry for, Jeremy? I don't think you've done anything. You've been a star boy. Happy days, happy days. Okay, right, gonna enjoy my coffee. Catch you all soon.